Not too much, Sam.
Great.
How you doing today?
How was
You know,
tennis?
I'm only bummed because I really had this vision in my head. I was gonna come join you guys and wear a tuxedo. I just
I
didn't have time
know.
today.
Next
You guys
time.
have
Next
that
time.
iconic photo on your website. I think the slow. So everybody listening, just go to slow.co. It's just the partnership wearing
Oh
tuxedos.
yeah, that's a great
Ben,
photo.
Ben, you should
Pull that
work
up.
on pulling this up. No, you have a good excuse. You were playing tennis. If we had more time in the transition there, maybe we could have got Serena
Yeah.
on for a second to
Yeah.
give you some
I'm
pointers.
heading to Indian Wells in a few hours.
Oh,
You
nice.
guys
No way.
Indian Wells fans?
No,
Yeah.
we actually do nothing but do this
Podcast.
show and
We never
hang
go
out with our
outside,
families.
basically. But Indian
Well,
Wells
fair
is lovely.
enough. I'm just trying
Yeah.
to fit the role of stereotypical venture capitalist for you.
That's
Come from
great.
tennis, go to
Yep.
tennis,
Yep.
wear a
No, the thing
tuxedo,
that what I
whatever.
like is the honesty. Too many venture capitalists like try to basically they're LARPing like they're not venture capitalists, right?
Exactly.
You know, they put on like I advise my friends like don't put up like a fake Zoom background to try to hide the fact that you're in this sort of like $30 million home, you know, like just embrace it. Like founders want to partner with people that are
Yeah.
very successful,
Yeah.
right? So
It's just authenticity. And I mean, we saw this with the SBF thing. Like people fake, like, oh, I'm not rich, and then it blows up because he was like complete fraud, and the whole like, I don't know. I'm very short, like faking that you're not like successful if you're
I am
successful.
pro honesty and pro
Exactly,
whatever.
authenticity. That's what it's about. It's not about like the flexing or like showing off. It's just about like just being who you are.
No, I agree.
anyway.
there's hopefully you've got a full kind of 30 minutes here before you head to Indian Wells. I feel like there's a ton of stuff to cover. I want to give you an opportunity to talk about your billboard that you guys
Oh
threw
yeah,
up this
we're
week.
very proud of our billboard. This is our first slow outdoor marketing.
Okay.
So
Yeah,
if you're
let's hear about
cruising
it.
north on the 101, you're going to see our billboard, which, you know, is a burning pile of money around a castle. And the tagline is AI is not your mode. And it's just
Yeah.
like we were just driving on the 101 and every fucking billboard is like AI this, AI that. And we're like, this is just like piles of money burning on the 101. So we decided to burn a little of our own money to
great.
kind of make the opposite point. So
There
it's
you
been
go.
fun. I like having a billboard. I think we're going to do more billboards.
I love it.
Yeah. Billboards are extremely underpriced. I
Well,
mean,
we're
we work
sponsored
with-
by a
we're
billboard
sponsored
company.
by
Next time you
AdQuick.
buy billboards, go to adquick.com.
And tell them we sent you.
Tell them you
No, I
said
love
so
it.
sent you.
No,
I
so-
love it.
so talk
Outdoor
about,
advertising is the future, gentlemen. None of this
It's a lot of
targeted
fun.
stuff on the internet.
Yeah, no,
Yeah.
it can go much more viral. It's a lot of fun.
Talk about basically break down some of the ideas behind the billboard.
Yeah.
You know, we've covered every single big AI fundraise this year. We've covered the big companies that are trying to roll it out. Some are doing it better than others. Just today, there was a new DeepMind team that spun out and raised at a $500 million valuation to do
Oh, cheap.
cheap. These aren't typical slow deals, but you have a good perspective on the market. Like, give
No,
us.
look, we've been pretty consistent on this for 2+ years. I mean, I wrote a deck in 2013. I'm sorry, not 2013, 2023, not that long ago. That was kind of about with a moment in venture capital, what the fuck venture capital. And the basic point of it was don't confuse the fact that LLMs are powerful technology. Like there's stuff you're going to do with them that are going to be great for all sorts of businesses with the disruption itself being a good business. My partner Will says this a lot. The big guy on the website, he's always
yeah.
like, just because technology is disruptive doesn't mean that's where the money is made. You have to think about the business model disruption and what's really going on. And, you know, just, I think we are in a super cycle of mimetic venture capital money lighting on fire in AI right now. And there's a bunch of structural reasons for it we talked about then. It's like LPs have too much money in too big of pockets. They got to figure out where to jam it, right? GPs, there's no narrative that makes sense. But guess what? If your LPs are going to pay you to jam money into AI companies and get paid the fees on it with a Go Fish card, it's not a bad deal, right? If you're willing to just spend a lot of money. And so, but we've just been incredibly short of this. Now, it doesn't mean we don't love companies that are enabled by AI. You know, I like what I call AI cherry on top businesses, which is a business that fundamentally is great, right? It's fundamentally, but then there's a non-obvious, ideally cherry on top, right? Which is that AI gives it new leverage. You know, I'm working on a new company with Joe Lonsdale and their team,
that's right.
which is called Merit First, and that's an example of a company where like actually structurally and sociologically AI does add something new as a type of company that should have always existed. It was hard to build before. Now you can build. That stuff is all great. But this like large model fight to zero, I mean, it's kind of wild to watch, to be totally honest.
Talk about Facebook's, just Meta's opportunity broadly in AI. If you were still working at the company, how would you, do you think our position overall is like they're doing a lot of things right? There's been talk recently about, having a standalone, app, which could make sense, but it doesn't even feel like they've been that aggressive with sort of productizing it.
Well, yeah, my view on Meta and AI is quite simple. It's a classic, which I love. Heads you win, tails you win situation, right? It's the best way the reason the stock has gone up so much, I think, if anything, is you look as an investor, you're looking around, you're saying, where do I definitely win on AI, regardless of how the breaks go? And the answer is going to be Meta, right? Yeah. They're, unlike Google, aren't going to get disrupted in their core business on this. They don't have a search business. They don't have a lookup business to disrupt. They have a shit ton of engagement and attention, and they sell ads. And you know what definitely gets better with LLMs? Ads. The targeting gets better. The creative gets better. You just win, right? And so at that point, the reality is like, I think they're incredibly well positioned. People argue that these numbers are huge, they're spending on Llama, whatever, but you got to look at it as a percentage of market cap. It is a tiny percentage investment, right, to cover their ass, right? And to make sure that whatever innovation happens in AI, enough of it's open source and the funnel is wide enough that it all ends up backing them. They don't get cornered and stuck out in the wilderness, right? So, but I think they're an incredibly good place. I think they're probably in the best place of any large tech company. And I'd say moreover, like, the way I've always thought about this and what I see is AI, unlike prior innovations, like unlike the transition from shrink rack software to the internet, is just so good for the big companies, right? It's easy to slot in. It commodifies. I mean, there's just like, you cannot think of a better extending innovation for a large company, right, that already has the infrastructure, the data center teams, and the whole nine yards. It's like, this is just all upside for them. And so I think what you see is like, it's great for them
and low margin, basically.
Well, unless you're Apple and somehow you got stuck way out in the wilderness. But like they're in, the Googles, the Amazons, the Facebooks, I mean, Metas, they're in great shape. And then if you're a tiny company, there's just so much leverage all of a sudden that, there is a lot of cost cutting. There's all sorts of things you can do that's cool. You just don't want to be in the middle. As with most things in life, you never want to be in the middle. And, candidly, even companies like OpenAI, or should we say nonprofits like OpenAI, the problem is they're kind of in the middle. They can't compete with the hyperscalers from just access to capital perspective. If this is a capital game, they're going to lose, right?
So do you think...
if it's not a capital game and it's a deep seek open source thing, they're also going to lose. So like the key in life is just never be in the middle.
Do you think that SoftBank can realistically spend $3 billion on agents with OpenAI this year?
Look, all I can tell you this is I joke. It's a joke, but it's true. One thing we've learned, we've been doing slow for 10 years. Whenever SoftBank buys, you sell. Right? Like they are the worst investors in the history of the world, right? And so it's just like I've watched them crush so many companies by overcapitalizing them, it's hilarious. I love their decks. But no, it's complete house of cards.
House of cards.
Was it always that way?
Masa's nuts, right? Every once in a while in his history, he's been nuts enough to nuts his way into some amazing opportunity that saved his ass, right? But like, I mean, he was the original LOL deck guy. Remember his unicorn deck with the unicorns and he's an incredible marketer.
Yeah. So why haven't we seen Masa taking bigger swings, in the early stage? It seems like
because Masa always comes in late and overpays. That's his thing.
Yeah. Right, but obviously
why
with
not set up a seed fund, like a massive infrastructure, just put $1 million into every new company, just write tons of seed checks. Like is it just an infrastructure problem?
Like why they just don't index the entire seed market?
Exactly.
Yeah.
I mean, it's an interesting question. I wonder. So historically speaking, when big funds try to index the seed market, there are two problems. One is someone wakes up and does the math and they're like, this doesn't make any sense, right? Like even if you have the $1 million check at seed, if you're trying to deploy billions of dollars, like it's just an irrational business model because the multiples don't make up for the fact you have to move gross dollars, right? Yeah. So the best case you're doing at seed then is just marketing, right? You're like, I do seed to market.
Yeah.
Hey, Des. I'm on the Technology Brothers podcast. You want to say hi?
Yeah, come say hi.
My wife, Jessica?
Yeah,
of course. She came over to the pool house.
Hey.
How you doing?
We wouldn't really be able to do the show without your team's coverage. We basically feature your articles,
like every day,
daily. So thank you.
I'm grateful. Congrats on all the success you guys are the talk of the town.
No, we
what do you want him for?
No, we subscribe to the
Hot
information. I have to think we're one of the I hope we're one of the number one referral partners because we get the paid wall articles and then we cover them, but we don't cover the full thing, so we basically are, pushing people behind the paywall. So it's great.
We got to strike a deal. So I'll leave you guys, but then,
let's do it.
We'll
let's figure it out.
Send some referral revenue your way.
Well, no, we're happy to support.
Happy to support.
Great to meet.
Oh, look at that. It's a guest on the guest. I love it.
A full house drop-in. Well, I'm just delivering your mail.
Thanks.
Have fun.
Bye.
Fantastic.
Nice. Okay, I want more hot takes from you on kind of all the hyperscalers. So what's going on with Apple? Are they just a luxury goods? Are they the LVMH of tech? Are they just going to kind of continue to make the same products forever? Are they done innovating?
Look, here's the reality. It's really fucking hard to make phones, right? Mm-hmm. And like really hard, especially in the modern era. It's really hard to imagine that they're going away anytime soon because of that. At the same time, I don't know if you guys get the Apple intelligence summaries of your text, but they're like comically bad.
They're hilarious.
They literally will tell you the opposite of what the text says, right? Yeah. Like it is useless, right? And so
I think it's valuable in that it's so funny because I'll screenshot them and send them into the group chat and be like, really, you guys were talking about this or something? And that's funny, but it's purely accidental humor.
It's insane, right? Yeah. And so I'd actually think that I would argue that Apple's intelligence text message product might be the perfect exhibit for an antitrust case, right? Where you're like, you talk about consumer harm, right? As like the kind of bar for this. It's like, this is what we're going to get out of AI, right? It's comical, right? It is really funny. I love lulz, so like I'm into it. I think it's funny.
Yeah, it was the
Jessica's
first time
phone,
an LLM
I swear to God,
funny.
Jessica's phone on their newest iOS update, it deleted all the contacts. And so she now just has phone number. Like, it is comically bad. But the problem is, on the flip side, is like the camera's good and it's hard to make phones, right? Yeah. So like, I don't, I'm still like, and who no one likes green bubbles, right? And so the reality is like, I think we're a long way away from Apple going away. Yeah. But my God, are they in a weird place right now, right?
Yeah. It is unfortunate
my
as a
point
consumer.
of view is
I just want better AI, and I know that they'll just be able to wait and just dominate the monopoly, and then eventually roll something out.
Yeah, like the very basic thesis is if LVMH is a luxury goods conglomerate and they're worth hundreds of billions of dollars, should the sort of digital tech equivalent, consumer tech equivalent of that be worth trillions of dollars? Like, yes, like they're not.
Well, maybe, away. But look, LVMH there was an interesting moment. You guys remember? I think this was like a few years ago, where there was this moment where LVMH. Or I guess the CEO of LVMH was the richest guy in the world, right? Yeah, and somehow like it inverted, and like tech was worth less. It was like a crazy inversion. You're like, wow. Yeah. So the meta story of our society right now is that it's not the innovators that are worth the most. The meta story is that it's like fake luxury signaling that's the most valuable thing in the world, and that was not a good thing. That was not a good moment. You
contributed to that with Facebook, right? Like Facebook was a huge catalyst for
tech becoming the number one source of wealth? Or
no. Luxury spending, right? Because now it wasn't like, your watch or your car is no longer just like, being seen by your local community, but it can be seen by the whole world, and you can sort of signal out, status.
Yeah, it's an interesting social dynamic, right? Because on one hand, I'd argue that Instagram has made it so that the real luxury consumption is experience and travel and being hot. Right? All of a sudden, like fitness is cool because like you can say you're hot, and being hot's like way more expensive than a watch, right? And so like actually that's the way, like being well rested is the luxury good, right? And like so kids are like the most expensive thing in the world. So all these things that you can like now socially signal as like I'm fucking rich easily, and like those certainly supersede your Birkin bag. Like those that's like cheap luxury, right? That's like mass luxury at best. And so like there's this weird dynamics going on. Now you all on the flip side, the reality is like, look, I don't know if you guys play with the Meta Ray-Bans.
We have
things are
here.
Freaking great.
Yeah.
Right.
Cool.
And like I do think that you talk about luxury and fashion, like if Meta had released not Ray-Bans, right, they wouldn't be as cool, even if they were exactly the same, and they probably wouldn't have sold as well. So like I'm not like a luxury guy, like I don't have perfect insights or taste on this, but there's weird stuff going on about how what luxury really is, how you display taste, how you display wealth, and certainly things like Instagram have had a big impact on that.
Totally.
Related to the Meta Ray-Bans, are you at all like a DAU, MAU of any other augmented reality or just like consumer hardware technology like Apple Vision Pro, Oculus, any of these products at all?
Apple Vision Pro has got to be the most expensive product per minute of use in the history of the world. I obviously bought one immediately.
Yeah, of course.
Yeah. I've used it precisely 0 times since the first week I had it. It's an incredible demo, right? When you think about it, I've actually tried to do the math on this. Like, it's more expensive than private planes per minute of use, right? If you looked at like the overall, like, so
I had the exact same experience.
I was a big Oculus. I think that Oculus is actually pretty good at this point. Look, I'm a Facebook loyalist, so I like bought every version.
Yeah.
I like everyone else played a bunch of zombie shooting games during the pandemic with friends, and it was super fun. Like, I'm into it. I think it's a really hard sell though when like your life is pretty good, right? Like, I think the reality is like VR and like immersive experiences and all other realities are kind of great if your life sucks, right? Because then you're like, I'm gonna like live in a video game. But like, I think a lot of the problem with that type of stuff is like, it's not, if you have a good life and kids and like do stuff, like what's the point,
Yeah,
right?
just go play real tennis instead of VR tennis.
Yeah, like I like Wii tennis, but I like real tennis better.
Yeah.
Yeah,
it's great.
That makes sense. One more. Do you have a prediction around Google? Do we have a new CEO there at all in the next 5 years? Or are they all in on Sundar?
On
forever?
Sundar? I don't know. Is that just like based in some news or rumor, or is that just like you guys
based on
shit?
it's purely based on Google has not managed to release an AI product that hasn't been riddled with issues, and it feels like it does. We you obviously can poke fun at Masa's picking ability and call him somebody that sort of signals the top or whatever, but OpenAI and ChatGPT have hundreds of millions of users, and maybe they're not replacing that sort of commercial search activity, but like much of the informational search, it feels like the golden goose is threatened for the first time.
It's a really good question. I mean, here's the way I would think about it: is Gemini is actually a pretty sweet product. The problem is no one uses it, right? Like, so is like the Notebook LM product. Like, Google actually has a bunch of very, very good products, right? I think their problem is they're so big, and the marketing and like driving of those products is extremely hard for them. And yes, I think they are the company that more than any other company in the world is in the position of both being way ahead in certain elements of AI and like has a huge advantage, but they also have the most to lose, right? And so I think that's a very challenging thing for any company. If you look at the history of companies like that, I mean, the best example from history was it Kodak, right? That invented the digital camera, right? And like they invented it and like they fucked it up, right? And and like you understand why though, right? Which is you have a bunch of these business concerns. Now, the interesting thing about Google is I think Sundar is a very good guy and competent manager, managing an enormous infrastructure, but you do actually still have founders with meaningful control in the picture. And I actually think that's good because I think to do really tough things, it's extremely helpful to have the broad sort of founders, right? The question is, it just has to be wielded. And so I think the bigger question is you look at this like letter, I think was it Larry Page's letter about please try to go to work 60 hours a week for AGI? Did you see this? The cycle around it?
Larry
it was
launched
like
a new startup today or yesterday.
It was like a wildly funny thing to leak, right? Because everything's going to leak. But it's like, I actually think it's less a Sundar question and more like, do the founders step up and just like broadsword this, right? Because that is, that is kind of, I think, what probably has to happen. And it's not a technology problem. Like, honestly, I think Gemini is actually probably, for a lot of things, the best product. It just is like terribly marketed.
Yeah.
Makes a lot of sense.
That makes sense. You guys, you've spoken out against, venture becoming this sort of asset management business, starting to look more like, private equity in some ways. At the same time, that's on the fund side. On the company side, we've seen this sort of venture style roll-ups where people raise venture capital dollars to buy, companies. They're gonna, and it's a great deal for the founder, right? To raise 20 on 100 and then just buy like profitable companies. In theory, it's better economics than traditional PE. But you guys at Slow have supported. I'm blanking on the name of the portfolio company, but what's your portfolio?
We've done
company?
a bunch: Metropolis, Team Shares, whatever. I mean, like, so here's basically talk track I'll give you. One is I am personally a snob about venture capitalists being asset managers because I don't think it's that creative or important or interesting. I will say, as a GP, it's a great fucking business model, right? And so, like, the seed business model we run is definitely less consistently and meaningfully profitable than like being a 16Z in a platform. There's no question, right? Like, so if you just want to make money and saying I earn DPI to justify more AUM is a very smart thing to do, right? It's just not that fun, right? And so like I'd rather do the fun part of the business, which is saying I take money in, but I take in the money I know how to make lots of money on. And then I run around saying, ha ha, I told you so, I was right from seed. That's like more fun for me, right? And so I think you have to like separate those as like, I do intellectually dislike it. I don't think it's a bad business model. Yeah. On the roll up thing, look, we started doing this before all the cool kids were doing this, right? So if you look at like the two probably most important deals we've done in this, one is team shares. We seeded that from zero. I bought 10% of the company originally for $400,000, right? We've kind of bought up from there. They've acquired well over 100 small businesses. They built a whole platform for scaling them. It's a killer business. It's kind of and they've done a lot of really smart stuff. But there is kind of a technology leverage roll-up strategy to it. You know, you can look at something like Metropolis, which is another pretty iconic deal, which again, we were the seed investors in. We were early seed investors in when it was a tech company. And we realized that it turns out that SaaS is a terrible business model, right? In a lot of verticals. It's SaaS is just like, everyone has this idea that SaaS is a great business model. It's not, right? You get paid later, it's hard to sell. And you know, the thing, if you think about like something like that's a transformative technology, you go to a CEO and say, I have a transformative technology going to change your whole business. It's going to make you 50% profit. You can't then say, give me 40% of the profit, right? They're like, fuck you, we'll give you your SaaS fee, right? So if you have an actually transformative technology and you can swing it, you're better off buying your customers, right? And then deploying your technology. But that's predicated on actually having a better technology, right? And so this is the thing I think people get wrong is, you know, when venture capitalists go fund roll-ups with the yada, 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 there's some tech leverage in them or no tech leverage. That's ridiculous. And it doesn't make any sense. If you're a smart venture capitalist, smart founder, you say, hey, I'm going to prove that I can be way better at this than my competitors, than anyone else in the industry. And then, by the way, it turns out for whatever reason, this is hard software to sell. It's conflicted. I can't get paid what it's worth, the whole 9 yards. Then going to PE folks and saying, hey, we're going to prove this out. We want cheap capital. We're going to go buy all our customers, I think is a great strategy, right? So the kind of the devil's in the details in terms of how you do this. And we're into it. I mean, there's one called TML, the lumber manufacturer we're really excited about. We definitely do this, but we have a pretty specific bar on what this is. And it's not just like buying pool cleaning roll-ups.
Yeah.
Can you talk about creators? I want to hear.
Yeah.
We love creators. I mean,
I want to hear who you're bullish on, and then what the anatomy of a deal that looks like a banger with a creator looks like.
Yeah, so here's the basic upshot. As you guys maybe know, like we just announced this $65 million vehicle, which is pretty groundbreaking, right? What we invest in is not C Corps. We invest in seed creators. So think, I own a niche, right? I'm doing $1 million in top line. I've got 1 million followers. I'm growing really quickly. And here's the key fact is you do the breakdown. You're like, I'm an awesome creator. I've built this community. I am the leader of it. I'm admired. I have this scarce thing. I have low CAC on high LTV folks. It's fucking sweet. But you're doing $1 million in top line. After expenses, taxes, you're living fine, but you don't have investable capital. We're like, we'll give you the investable capital to build C Corps and businesses, right? This is a new pattern of C Corp generation and building we really believe in at Seed. Now, how do we get there? We got there because it's really hard to invest in seed creator businesses because the equity and the value of the community is held outside the company. And so Jane wakes up in 5 days and we love the community. We love her. She's like, oh, fuck, it's actually not this, it's that. It's not Mr. Beast Burger, it's fucking Feastables. Yeah. You do not want to be in that scenario, right? Yeah. Like no one wants that. It's bad for everyone. We want to be able to invest in as aligned a way as we possibly can with creators. And so we were like, look, we do this effectively with founders anyway. We don't take board seats. We want to be first check-in. We're trying to be collaborative holistically with them. We want to be aligned with them. If they win, great. If they lose, c'est la vie. What is the equivalent in creator? And like that's kind of what we're bullish on. So I think, it turns out in creator, like most things, the transparent deals, the super buzzy ones, Masa style, they always get super overpriced, right? Because everyone knows them and they say, oh, we like creator important, buy creator, right? Sure. We're much more interested in providing capital where it's scarce, which is we think seed creators and we think on this model.
What about putting those two things together? Have you thought about going to a creator and saying, hey, you would be perfect if you owned this business that already exists. We buy the business. give it to you, repackage it, and then you're kind of the marketing front end. Is that a crazy idea, or have you
It's
thought
not a
about that?
crazy idea, and we get pitched it all the time, actually, in different verticals. Like you have the god of lawn care who wants to buy the lawn care companies.
Yep.
It's not crazy. But I do think it's complicated to get right, right?
Sure.
And I think there's a thing I like to say about seed stage investing, which is no fucking bank shots, right? And the more variables that have to be right, domino style, the less likely it is that the thing actually happens, right? And so for me, it's like, so you want tech leverage and a roll up, and we're gonna put a creator on top, and da da da. It's like something will not work, right? And like that makes it a hard bet. Now, but it's intellectually not wrong, right?
With kind of two follow-up questions. On the creator fund, do you guys have like a no zeros policy, right? A lot of these creators generate revenue from ads, right? So if you invest $1 million and they generate, a couple $1,000,000 a year in ad revenue, like even if they don't make a banger company, like you'll get your money out eventually, or how do you think about it?
So here's the way we think about it. It's a great question. We're not that interested in your ad business, right? Like we just don't really care. Like there's no enterprise value generated in that. It's really nice non-dilutive financing sometimes, but like it's not what we're playing for. We also are not interested in taking some creator's last cent, right? Like if you're just like you're making $1 million after you pay taxes and whatever else, you're living okay. We're not going to be like, hey, by the way, we want our 10% of your ad revenue. We don't care. Now, there is a scenario we do care about protecting, right? Which is if you take our money, we're doing the seed thing, we start a few companies, they don't quite work. But in the process of spending our money, because you marketed yourself and whatever else, you get 10 times bigger.
Yeah.
And then you're like, I kind of just like Super Bowl ads. I'm just going to do a bunch of Super Bowl ads and I'm going to make $15 million, $20 million next year on that. We'll want our piece of the upside on that in that model, right? But like our whole thing is about alignment, and we're certainly not primarily interested in your ad dollars, right? It's not like a slope. Now look,
but
it
it's
does
almost like
it
a
doesn't
safe-
hurt
it's
that
a
there's
safety
non-dilutive
net.
financing,
Yeah.
right?
Yeah.
Safety net. Makes sense.
Mr. Beast is marked around $5 billion right now.
It's a private mark. I wouldn't read that much into it.
Yeah. But I'm assuming that everybody that's investing hundreds of millions of dollars into Mr. Beast or billions wants to get their money out eventually. It's hard to imagine anybody buying it, outright, right? Do you see Mr. Beast going public in the next few years?
I am sure that's what they want to do. Like,
and how does
obviously,
that? And
right?
Is it a stock that trades, kind of like True Social, where it's just based around attention and doesn't?
I think it's a meme
underlying
stock. It's a meme stock if it gets out, right? It's just a meme coin on steroids. The reality is like it's not. Again, I actually credit Jimmy, Mr. Beast. He's done a few very important things for the creator space, right? One thing he did is he's made a lot of creators dream a lot bigger, and that's great, right? Like I appreciate that, right, from a perspective. I also think he's really, I think, been a good example and a beacon of creators aren't just creators, like they can start businesses, like whatever. So there's been an aperture opening that he's really helped with that I think has been great for the industry. Now, that said, I do think there's some structural problems with his quote unquote business, right, as a creator business. Like I'll give you an example. Like one, we care a lot about the LTV of customers, right? And his audience is so broad and candidly pretty poor, right? Which means that like they're not great customers, right? Like there's a reason you sell chocolate because it's one of the only things you can sell to everyone that's cheap, right? Yep. And like so there's like it's not like the best audience. It's also, the reality is he does a lot of this media stuff like everyone's excited that he gets $100 million Amazon contract, but then he spends more than that on the show, right? Like, and so it's like, it's just not clear to me that in the hyper competitive entertainment space with a broad general audience, that's like an amazing business. But look, it is definitely a cult. And I'm sure there's a bunch of like 20-year-old kids that will grow up and trade it like a meme stock, right? And like, that could be fine, right? It's just not like a thing where you're looking at it and you're like, this is a money printing machine, right? Which is what I'm more interested in.
To my knowledge, you're thinking about the slow creator program where you would want one of the creator's underlying companies to go public, but not the creator holding company to go public, and that there's some brand risk to the creator if you're having a financial asset that's trading based on your popularity, and if your popularity goes down, you get even more unpopular because I've been interested in this kind of how do you think about financing people with equity versus debt for a very long time. I started my first company in 1999 when I was in high school. It's called lifecapital.com. And the idea was basically some version of this, right? And so like I think that thematically makes a ton of sense, right? As the world gets more unequal and outcomes are more discontinuous,
debt financing does just broadly not make sense for people, right? The equity model, and we've invested in a bunch of versions of this, right? Including some that recently. So I do think it's a very interesting spit, specifically for the creator fund. Again, you kind of are, you are what you eat, right? In this case, we like eat LP dollars, and like from an eating LP dollar perspective, and like what the structure is, the good news is we really think there's an opportunity to deliver normal ass C corps, skims, whatever you want to call it, right? That start with creators, but are perfectly huge, amazing companies to back from seed, right? And so that is what we do with that. Is there residual value to the holdco pieces? Yeah, there totally is. Like in 10 years, because these are 10-year funds, do you have to figure out how to wrap that up or resell it or like retrade? Absolutely. But like candidly, this market is moving so fast that the way I think about this is like we're investing in launch pads for amazing C Corps that are driven first and foremost by amazing communities that are led by amazing founders that are creators. Like that is what we're doing. And yes, at the end of a 10-year cycle, which then has a bunch of extensions on it, you do figure out what you do with the residual assets.
Yeah, that makes sense. I have so many other questions here. I mean, the main one is how quickly are you pushing creators to are you thinking of these creators as a catalyst for the C Corps that they're spinning out? Because one thing I've seen from spending millions of dollars with influencers is like oftentimes you'll spend $100,000 with an influencer. It performs well, like if it's sort of like a broad consumer audience, and then the performance can drop off over time because there's only so many buyers in the audience. How do you think about the almost no creator is big enough to sustain a venture scale, C Corp by themselves, right?
Well, it depends on what verticals and how you're looking at it. Again, like when you think about creators, it's such a broad space and used so broadly that I think you can mean a lot of different things, right? And so, look, one of the dirty secrets, which it sounds like, is in the venture capital world, entrepreneurs all day long will pitch you about how their CAC is very high, but the CAC will come down. Here's a secret: CAC always goes up. Right? It always goes up. Like CAC goes up, not down, right? And so like what you're experiencing is that. It's like if you spend money with an influencer, they're the people who want to buy the thing anyway, you reach them, it's cheap, and then you hit a wall. Like if it's just like a general product you're selling, right? And so you have to think about it as a launch pad from that perspective. We want to back creator founders who come in and are they want to be entrepreneurs. They like pitch us business ideas. Like they have their list. They're like, okay, like I know my audience in lawn care, in terrariums, and you name it, better than anyone in the world. Here's the 10 things that no one knows. And by the way, I can sell them. And I know I'm selling it to myself. Like I'm the leader of this and I understand the space better than anyone. And I have access to the community and they trust me. That's what we want, right? We don't need them to come in and be like, here's the business plan 100%. In fact, we kind of just, but we do need that list, because if you come in and you're like, I'm a creator, I have the audience, but I don't know what to do. We're like, well, are you an entrepreneur or are you just gonna make more media, right? And we're like, the media is fine, but the media has to support real businesses.
Yeah, that makes sense.
Cool. Anything else?
That's all I got for today.
Wait,
you're the man.
Last question. Who's a better grill master, you or Zuck?
Oh, definitely Zach.
Okay. I had to know. Fantastic.
I mean, look, I wouldn't say I'm bad, but like I think that man has invested in the craft of grilling in a way that I have not.
I love it.
That makes sense.
Well, thanks
we'd
so much for coming on.
We'd love
This
to
is
have you as a
fun.
regular.
Yeah, anytime you guys want to reach out. I really love the show. It's super fun.
Thanks
I
so
love what
much.
you guys have done, and we love bullshitting. So
yeah, it's great.
You love to yap. We love to yap.
It's a match
yap.
made in heaven.
It's a match made in heaven.
Well,
have
enjoy
fun
the
in,
We'll collab on a
Indian
billboard
Wells.
someday. It'll be
We
fun.
should.
Yeah.
We should. That'd be great. Well, enjoy
One-on-one
Indian Wells.
takeover.
Enjoy the weekend. Have a great
Talk to you
time.
guys.
We'll talk to you
Later.
later. It's great.
Have
Bye.
fun. Bye.